headline news on Disney's earnings seems straightforward enough, right? Profit at the world's largest media company down about 7%, but RBC Capital Markets analyst David Bank calls the fourth quarter report surreal. David is a Bloomberg best media analyst. He's here with us right now. David, surreal. There was some crazy stuff that went on.
Talk about a Mickey Mouse operation. Something not unprecedented, but that we don't see a whole lot. The earnings release actually came out at 3:30 in the afternoon before the close, and on top of that, it really appeared to be a miss. I think when you got through the conference call and you carved it back, it wasn't quite as bad as we thought. And the forward commentary was good, but boy, was it really confusing for investors.
Is there an internal controls problem at Disney, releasing a negative surprise early, catching the market totally off guard? Last year, right, one of the company's secretaries and her boyfriend were convicted of selling inside information. What has Bob Iger got to do here?
I'm real good at analyzing the financial statements and hopefully understanding some of the fundamentals, but the inside workings of the PR department, you probably need to call over to them.
All right, so a sloppy quarter, but you say the outlook is good. You raised your price target to $41 on the stock. What makes you so optimistic?
Well, the things that went wrong were actually pretty one-time in nature. They were programming write-downs, and that's the way content companies work. Some hit, some miss. I think the trends that we care most about, things like bookings at the parks and pricing, both looking up. So what we're seeing is there is some pricing power in the demand.
Where is Disney getting the pricing power in this economy?
Yeah, I guess there is a segment of the economy that has money to spend and that is going on vacation and they're going to Disneyland. I suspect they're just doing really well in the sort of upper income levels. I think what's happened is they kept attendance pretty strong even during the recession. What they did was they offered a lot of discounts, and they're starting to pull those discounts back, and people are willing to pay more. So they're just really good at what they do. It's that simple.
Amazing.
And then I think the advertising trends also excellent. We're looking at double-digit growth continuing.
David, hang on. We are back with RBC Capital Markets analyst David Bank talking about Disney and what he terms its surreal fourth quarter report. The earnings out half an hour early. David, you raised your price target. We've been talking about your reasons for optimism. One of them, the movie franchise, specifically Pixar. The next version of Cars is coming out. Do you really expect this to be as much of a blockbuster as the last one?
Yeah, well, these kind of sequels tend to be, and I think not only was the movie a blockbuster, but almost as important, it was probably their biggest consumer products franchise in history. So you move into the content cycle, we've got a giant blockbuster movie coming out, and you've got your biggest consumer products driver. It's sort of hard to see how fiscal 11 isn't going to be a pretty good one for them in terms of the content cycle.
Given some of the trends we're seeing in media, it is easy, I suppose, to be enthusiastic about a company like Disney. How about some of the challenges? They talked about Google TV, for example.
Right. So I would say it's a balance of opportunities versus challenges. And right now what's consuming the media industry is the concept of over-the-top delivery. And the concept that we're going to start to be able to get our content more consistently outside the cable box and on our computers over an internet line. So what do we do if you're a conglomerate like Disney about something like Google TV? Disney has chosen to restrict access of its content from ABC on Google TV and probably give up advertising revenue in the process. But they've got a delicate balance between getting paid in a traditional sense and getting paid in new media. And I think they're really just trying to figure out, like the rest of the media industry, how to optimize their revenue streams. Lots of opportunity, but disrupting the existing ecosystem could be really dangerous.
Well, the battle continues, right? Platform versus content. David, thank you so much for being here. David Bank of RBC Capital Markets. He is a Bloomberg best on media.